If you're looking to get a funded trading account, it's important that you partner up with a firm that is reputable. A firm that's led by a group of traders that have spent decades on trading floors and desks all around the globe. And it's important that when you take an assessment, you follow one with sensible rules that are easy to follow, that promote good risk management skills, because ultimately as a trader, that's how you're going to succeed in the markets, is with good risk management. And also, you want to be surrounded by a community of traders and have tools at your disposal. And that's what ForexAnalytix is. So in the month of July, if you take a trader funding program assessment, you're going to get a 45-minute consultation with me, Blake Morrow, president of ForexAnalytix. And I'll spend 45 minutes with you one-on-one and talk you through the assessment process. So book your assessment today. I'd like to talk to you soon.
George, welcome back.
It's always a great compliment to be on this show. Always learn a lot, and I think I should be regularly following this show, at least while we're in this dearth of any sort of real macroeconomics or monetary economics. Terrific.
I wanted to ask you about a few things. And I know, I've read your stuff. Last time you were right to be sanguine about the market. We had a continued melt up. Bonds have not performed badly. Even when there was risk off, they kind of held together. And to me, is the refunding package an important thing for us to consider as far as supply coming into the market? Does that affect your narrative at all, George?
It doesn't affect my narrative, but it is very important, but only because 90% of the folks think it's important. So who am I to debate what sentiment is for the mass?
Okay.
But as far as macro or even monetary economics, it's of little importance.
Okay.
In the end, U.S. Treasuries will be set by NGDP.
By what?
Nominal GDP.
Nominal GDP. Okay,
Yeah.
so and that was 2.8 last week, right?
I'm sorry?
And that was 2.8 last week. We got the
Yeah,
GDP.
2.8
Was that
real.
nominal?
Yeah, that was real.
Oh,
And then you
okay.
got to add the inflation on it, and it got up to about 5.2. What's remarkable about nominal GDP, and of course, corporate earnings are paid nominal, everything's paid nominal, so
Right.
it's sort of a head scratcher why people pay so much attention to real, is that how steady it's been since the COVID fiscal spend kicked in 2020. Now, it was higher for a year or so, but we've been cruising along at 5 to 6.5%. And it is starting to drop a little bit, but with no drama, and easily explained by the amount of fiscal spend and the lack of any monetary presence.
When I think of things in nominal terms, for me, I think of them in dollar terms. And
That's exactly, yep.
and I'm a currency trader. And
Yep.
I think that we're at a very important inflection point in the dollar, George.
Mm-hmm.
And I'm thinking that a lot of people looking for a higher dollar. Before the Trump situation and their policy about wanting to weaken the dollar, I was already on that narrative. I think we could go to 105, but I think there's a possibility we have a big breakdown in the dollar, which is going to change nominally, right? Everything. A weaker dollar is going to make almost everything worth more nominally, correct?
Absolutely. And I think there might be limits to that because I see the dollar as an administrated rate. I do think, well, it's 20 people, G20 gets together and says, look, we just can't have the euro at 99 as it was in the fall of 22. We got to have it up to 108, 109 because you're just killing our trade. So sure enough, the euro goes up to 108, 109. And I think it's, if you just look at that chart, I think it's been an administrative rate since.
It's been
And
pretty range bound, George.
yeah,
You think the
yes.
G20 could keep the euro confined to
Well,
this
I
range
think
that
it's at the request of G20, but I think it's just whatever the hell the United States wants. I
okay,
have a very sort of power crazed view on what the U.S. can and can't do, and they're willing and they're able to just keep the euro at whatever best suits the U.S. in terms of its alliances and the dollar block to carry on. Right now,
okay,
I think what's going on is that they got Japan cheapening up, sort of like a bit of a reversal of the Plaza Accord, where they're moving yen up to 150, 160, maybe back down to 140. But
that
that
could
is,
happen.
yep, that's a counter to RMB and China. They're trying to give China, give them some gears. They're promoting Japan now in that block, also probably Korea to some degree, and they're trying to take the wind out of the sails of China. And I think that's really what Trump is saying when he wants to devalue. It's not so much versus the euro, it's versus the RMB. And I think the ultimate goal is to get the RMB down to 4, 3.5, something like that, just as they did to the yen in the late 70s, early 80s in terms of the Plaza Accord.
And how do they, I've asked this question to guys who follow the Fed, to other people that, are commentators. And, the Plaza Accord was one way to do it. Can they do it just by jawboning? How does the executive branch and the Treasury get what they want as far as direction in the dollar? How do they, what are their powers to bring down the dollar so that we could, have the export advantage like Vance is talking about and tariffs like Trump is
Mm-hmm.
talking about?
Well, I think it first has to be decided that this free trade is for the birds. That we've had this experiment ever since China entered the World Trade Organization, 2000, and it's done nothing for the U.S. and it's done a hell of a lot for China. I guess it's sort of helped out the U.S. security because we didn't need two more aircraft carrier task force out there in the South Pacific to
For a while.
offset,
Yeah.
yeah, for a while. But I think it's just too costly in terms of how it's hollowed out the Midwest. This is what Vance is speaking to.
Right.
Jobs, it used to be that you towed the line and did your job. You got a bass boat and a nice house and 3 weeks vacation. That's no more. Now you got to hold 3 jobs and hang out. Why? Because China's allowed to just flood Walmart and Amazon with cheap goods. And why wouldn't China do that if the U.S. would allow it under this free trade? So this whole idea of the currency is first requires that the free trade thesis has to be tossed. And I think that's what we're going through right now. And I think
Well,
that's
didn't
a
that
major.
start with the Trump tariffs years ago?
Absolutely.
That was the beginning.
Absolutely. And the Biden administration realized that that probably was not a fight worth having. Anyway, it obviously was picking up some economic points. So Biden just did more. Now he not as terms of a counter, but he said, okay, if we're going to have more jobs because we're going to fight tariffs, then what we're going to do is flood the country with a fresh crop of workers, and I think that's what's going on with the illegal immigration to the U.S.
Okay. So because of the poor demographics or because of their
Um,
potential
if the
being a voting bloc. Do you believe, a lot of these conspiracy people say that these millions of illegal immigrants that have sought sanctuary here, that they can vote? Do you believe that they can
well,
vote?
I think they are going to. Whether they're going to do it on the up and up or just in shady boxes being stuffed right now remains to be seen. and I don't know if that's really a bad thing for the U.S. because there's an idea that the Democrats are going to be able to control this bloc and stuff them into like these urban hellholes, um, and you know, direct them to vote Democrat because of the the perks that they get by just hanging out. Now, that's a very crass, but that has sort of been the history for New York City and L.A. Watts and Chicago South Side. Um, what I think is going to happen is that if I'm a guy from Nigeria and I just spent and borrowed and begged every last cent I have to hit a boat and somehow get to Mexico and then walk like 2,000 miles and then go through, have a 10% mortality rate with my fellow peers making this trek. I don't know if it's clear that I'm going to sign up for this plan to get into the urban control. I think these guys are going to end up as Republicans or at least conservative. That being said, I think that's the way the Democrats hope to offset the political enhancement that that the raise in tariffs will give the Republicans. It's definitely political. I think it's short-sighted on both parties. But the central theme here is that free trade is being tossed out the window.
Okay, so free trade has been really kind of the wheelhouse for this prolific bull market that started in 1982, which wasn't that before NAFTA and the World Trade Organization, a lot of the treaties there letting China in. So if we're going the other way, are you still sanguine that things like NASDAQ, especially high tech and the valuations, that it's still clear sailing here in NASDAQ and S&Ps?
Oh, I definitely think so. I sort of like maybe flippantly, but I sort of sincerely said 6,000 on the S&P 500.
Okay.
This was in quarter 4 of last year, and that's what's happening. I'm certainly
Almost.
on track as far as chronology goes. Um, and I
Would
think
any
what's
would
happening.
any price level, George, change your forecast? Say, for example, we, tried to rally and weren't able to make a new high, and then we take out this 5,400 level, which I think is big, technically. We take
Yeah,
that out, it'd be pretty negative looking.
well, I have two thoughts on that. Is that first of all, right now, uh, my views have worked out, but they're views in terms of like, 2 to 3 quarters of the go. And there's a lot of time between the beginning and the end of like figuring out whether I was right or wrong.
Okay.
And this is because the Federal Reserve is no longer having a reaction function. There's no settling out every FOMC or every week in terms of whether the data was here or there. They've put it all into forward space, like 2 years down the road, 3 years down the road. So that means any mem, any sort of popular sentiment that claims macro or monetary understanding can be tabled. And I think that's the spiel that you alluded to with the idea that Yellen is somehow by supply and demand fixing interest rates. I think it's hooey. What I think it is that there's a massive vacuum in terms of actual ongoing data in terms of now that is saying you're wrong, this guy's right, and drive on. So that means that the technicals is probably this is about the glory days of technical analysis because there has to be something that fills this vacuum of lack of understanding of just bullshit.
Speaking of vacuums, George, the bond market was the deepest besides currencies. And
Mm-hmm.
there are days, TLT, which is a pretty good proxy.
Mm-hmm.
Look how we're just gapping around and there's little dots and there's no liquidity here, George. I mean, I
Mm-hmm.
think they're going to drive a bear market rally. They look good, but what's the problem here? I remember when I would pull up a chart like this, it would be a bulletin board stock, and my expression would be this
Pink
is a
sheet. Yeah.
stock you have to make an appointment with to do a
That's the
trade.
pink sheet. And then if you
Huh?
did make money in the pink sheets, the SEC would come knocking in about 3 months. But
Anyway, I mean
anyway,
look, we have dots in the most liquid market out there. But it does look like the pay that to me the path of least resistance is lower rates. I can make a case for 3%. Now, is it 3% and everything's going to explode, or is it 3% and maybe risk realizes that rates might be coming down because we're entering a soft patch?
my view, and this is based on 30 odd years of experience
There's 3%.
prior to QE and all that stuff, a decade ago,
Yeah.
is that U.S. Treasury 10 years especially will always price to the waxing and waning of the U.S. economy. If the economy is going to, is thought to be maintaining a 5.5%, then, another 20, 30 basis points for injury, for volatility and risk, that means U.S. Treasury 10 years will see 6%. If the U.S. economy is going to hit the dump, is going to be dumped, and it's going to go down to 3%, then you're right. I think U.S. Treasury 10 years will go down. Now, the 10 years is liquid. I think the Fed's coming in and out, and I think the Fed's the dominant player still in the 10 years. Your 20 years, I think, is more telling. It is the pink sheets. It is a liquid. It is not liquid. It's an administrated market. Just like foreign exchange, I think a bunch of bright guys at the Fed, for various, I think, mistaken theses, have gotten together and say, we're not only going to run Fed funds, we're going to run the whole curve right out the 10 years now. And so even though they're selling with QT supposedly, demand supply doesn't impact. What they do is they just set the rate. They say, we'll sell, but it's going to be at 4.25. And the guys will say, yeah, but it's worth like 5%. And they say, no, we'll sell. And if you want to be, called, it'll be 4.25. And I think that's what's going on right now. It's an administrated rate. If you look at other rates, 30-year mortgages are right now going back towards 7%. They went down as low as 6.75, but they're back up to 6.78. All rates that do not have this oversight from the Fed are indicative of what's going on in the economy. So if you take a look at 30-year mortgages, which when you get into mortgage-backed securities is just behind Treasuries in terms of liquidity and importance, that is clearly reflecting a different story than what you're seeing in U.S. Treasuries. The curve is positive. The term premium is positive, and not only that, the outright level for roughly 10 years equivalency is approaching 7% again. It got as high as 7.75 in that ruckus we had last year this time. So I wouldn't be surprised from a macro and just in terms of flow that once the Fed gives this up, and I think they will give it up, I don't see how they can keep going like they are, then we're going to see toward a 6% in the U.S. Treasury 10-year. Bull call, but as I said, I take a quarter to quarter point of view, and I don't have to I don't have to be responsible for what happens week to week. So that gives me
You're
a
looking
lot
for
of
6%. You're looking for
yes,
6%.
Okay.
Yeah. Could we have 3 first and 6 later?
Oh, absolutely. But I don't
Okay, well,
think
that's
so.
what's going to happen.
Yeah, because that's a function of Fed's interaction with the market, and as their required reserve levels for the system bank become stabilized, they have less and less excuse to come into the market. So to get to 3%, I think the Fed has to have a big excuse to come into the market, just from a flow point of view.
What are they going to do this week? Nothing?
I think they're going to cut.
This week.
Okay. Yeah, I've been saying this for a couple of weeks now. Of course, I've been saying this like 2 months ago. But anyway, and I was wrong for the previous FOMC. But the FOMC, or excuse me, the Fed in terms of the actual rubber hitting the road, in terms of flow of funds, has been remarkably ineffective and not present in terms of what's going on in the economy. It's a hell of a story. It's a hell of a focus, and everyone said
Are they
that
behind the curve, George?
they're not even in the curve. They're in some sort of fantasy theory on how monetary policy should be conducted, which has been proven since about 2012, 2014, is not working. This is called neo-Wixell, and this is like 3-hour babble right there, Dale.
Yeah. Okay.
Um, and because it's not
Then let me
working,
ask you about something that might be, another guy who I respect. He was chairman of the CME for many years. His last name's Duffy. I think it's, I don't know if it's Terry Duffy, but he was talking about that the U.S. was going to transfer clearing of Treasury transactions to the UK, that it was going to be a UK clearing firm. What the heck is that all about?
I think it is transparency is the key word there. UK, I don't know. They just I guess with Globex and stuff, they have more experience and they had a lower bid.
Well,
I
look, they have a track record. They had the gilt crisis a year ago. Do
right.
we want to cede that type of authority to the UK?
No, I think it's a very bad idea, and I think it actually should be in the auspices of the Fed or the FDIC or
Or
one of those
Pinkert's?
bodies.
Why don't they ask
Yeah,
us, George? Huh? What,
absolutely.
they should ask us. It's easy. Man on the street
But
would say, go ahead.
but what's important with all that is that transparency has been forced upon a few big players, if not one big player, such that they can't game the U.S. Treasuries as they did last year. There's no longer. I don't know if you recollect Paul Mosier at Salomon Brothers in the late '80s. He ended up in jail, but that is now like that, or was like that times 10. And was like when a big player came in and decided, I think we're going to range bound the U.S. Treasuries, not in terms of 4.25 to 3. We're going to do it from 4 to 5. Why? Because that maximizes our options that we're trading on the SIBO. That being the case, they just ran roughshod on it, and Gensler came out and insisted on transparency, and they no longer can do so. So instead of driving it down to 3 7/8 or up to 5, they now can only do 4.25 to 4.5, 4 5/8. So that ability to game the market has been taken away. And I think, therefore, the realities of how U.S. Treasury 10 years are priced will come about.
Okay. I don't know. Ceding that power to the UK, they have their own
I,
issues.
it's goofy.
They have their own issues. George,
It's
I
very
wanted to
goofy.
show where people could keep up with you. Look at this. The guy does white papers.
Nah.
Okay.
Well, I
Oh,
guess I
Lynn
do,
Alden.
but
So
yeah,
I know
we've done
Andy. I
we've done
know
a few
these
papers.
people. Yeah.
Yeah, I have great respect for Lynn. I have great respect for Andy as a trader. He did a terrific job at Solly and later City, and but I completely disagree with all his framing right now. In fact, I think he got pissed off at me. I use him as sort of a good example of what's wrong in terms of analysis these days, and
Oh,
that's what
okay. Yeah.
that white paper does.
Well,
Uh,
come on, you can't take yourself that seriously. Anyway, George, people can follow you on X at Bicker
mhm.
and Brattle.
Bicker and
Bicker and Brattle.
Brattle. Yep.
And
Robbie
the
Burns' poem about the mouse.
okay, and here's your Substack here, the Monetary Frontier dot
That's right.
Substack.
Really
Okay.
appreciate you showing this, Dale. Yep.
Okay, so clear sailing with the stock market to 6,000. You think we get there before the election?
I think a very good possibility. I could see like Kamala panicking. I think that's why the Fed's going to cut this week. is because they need a boost in the arm. I see the Fed as nothing but a political animal now, and it'll do whatever it takes to get Kamala or whoever. Well, I guess it is Kamala into the White House.
Okay, so you're certain there will be an election.
Well, I'm off to my homeland in Cape Breton if it's not. So yeah, I'm out of here.
Okay, I'm wondering where will it really be decided, George? The Congress, the Supreme Court,
It
or the
might end up in Supreme
streets?
Court. We might have a repeat of Gore versus Bush.
You know
This
what the difference is?
What's that?
There's not an Al Gore in this race.
That is
That would
true.
step aside for the good of the country.
I think that's very true, and I think as
So
long as we end up with this 50-50 split, we're in rough shape. One
yeah,
party or the other has to figure out how to get 60% of the electorate, and stop this corruption of, like, I got 50.5, you got 50, 49.5, and which just is it's just not working.
I hope long term you're right, and 6,100 is only 5% away from where we
Yeah,
were. So
yeah. No,
I don't know. Is it worth going for the last 5%? What if it
well,
doesn't get there?
I think the macro setting is insists on it. And I think what's
Okay,
the real fun discussion I have is that if we get to 6,000, fear will be forgotten and greed will kick in,
and we'll go
and
to
then we'll get into
7.
all sorts. Who knows where we go? That we're getting into Minsky territory and the makings for a bubble. Right now, we don't
So
have a bubble,
okay,
but I think we could end up with that.
all right, George. So
Very
there's
good.
time to keep uncorking the champagne bottles. George Robertson, follow him,
All right.
guys. He's not afraid, and you know what? He doesn't get angry when people disagree with him, as you can tell. He just believes in what he sees. So, George, I
I just
appreciate being able to have a conversation with you every quarter or so.
Oh, I see. I seem to be. I look forward to the next one, maybe sooner, if things come about as I say. But in the meantime, this is the golden day of technical analysis. This is you guys rule the roost, and all those
Okay.
guys who talk about, like, activist treasury intrusion or whatever they call it, and various other memes and secret sauce theories that are supposedly macro monetary are really cloaks for people not knowing what the hell's going on, and so they can't just accept the fact that they're technical traders now. They have to have a more substantial reason for what they're doing. But in
Yeah.
the end, right now is just the glory days of technical analysis. It
And
works.
it
It's the only
is
thing that
like there
works.
was nothing fundamental that said gold would peak here, but I did
Absolutely.
have this line in here for
Yep. For the
weeks
record, you did.
prior
Yes.
to it getting there.
Yes.
So, you
And
know what? It still amazes me, even
yeah.
though I've seen it happen again and again. It's still, wow, I could draw a line and the market gets there and there's a reaction to it. It's just a line.
Well, I think Dale, what you got going on here is that this line is the market now. It's there's a lot of people. It's common sense. I mean, look why you put the line there,
Yeah,
and they don't have any monetary economics to work with now. They got bullshit. They don't have any macro economics. They don't like that either.
yeah.
They just want memes and, like, secret sauce, recipes.
And
This
algos
is and
and
algos.
algos.
This is what's running the market right now.
Okay. Well, good to be a master of the universe. For every once in a while, it feels like that till I get humbled.
For now,
So,
enjoy it, Dale. Enjoy it, Dale, because we're going to get back. The Fed is going to come back, probably in a panic, and
yeah,
all the old stuff is going to reappear, and there's going to be a bunch of characters who are babbling away about week to week macro and
yeah.
monetary.
And
So enjoy it while it
Paul
lasts.
Paul gave Generation Xers bad advice when he started his tightening regime. He told
Mhm.
them not to consider buying a house now. that he would
Right.
wait a little while. So
Right.
obviously he thought that his tightening regime was going to bring down real estate prices. It's only exacerbated it. And now they're
Yep.
going to ease, and there'll be more activity.
Yeah. I think this Fed is at some point they have to face honesty. They're not, all they are is
You want to
babbling
end the
away.
Fed, George?
No, I think the Fed is crucial for America. I'm
Okay.
a huge Fed fan.
All right.
It's just not this Fed.
Not this Fed. So next
Yeah.
time we won't get a lawyer.
or
Anyway,
a
we'll
third-tier
put it.
Carlisle guy.
We'll put in. I'm sure. Uh, should President Trump win, he'll put in an Arthur Burns type.
I I think he will. I think what's actually going to happen is if we do get this mania bubble, and I think there's good possibilities for it, and then we get crushed, which characters like you will pick up because this would be a absolute
Yeah.
classic Fibonacci double top, whatever you want to, however you want to talk about it, and it'll get crushed, and you'll be the only guys that get it, and just like the Nikkei imploded,
Yeah, but look at
and
this,
then
George, and then I'm going
yeah,
to say goodbye. Before
okay, you
this
got it.
candle happened here at the high of
Mhm.
NASDAQ, before the Mag 7 got crushed, and they got crushed, and they could have recovered to 20,000. But we were talking about in here, well, maybe we don't have to predict it. All we have to do is wait to see it. And this was a key reversal that was never negated for weeks and weeks and weeks. And I'm selling rallies. Okay.
Mhm.
So, everyone thinks it's clear sailing through the elections. My sister said, Dale, I'm going to get out at the end of October and get back in right after the election. And I say we're going to have a little summer summer scare in the markets. That's where
I
I'm
think
at.
you're right on. An interesting chart, and I'm not gonna go on for another 10 minutes, but an interesting chart. Put J.P. Morgan up, uh, and I think this is like the core reality of what's going on in the
You
economy.
like it? I was reading. You like JPM, right?
It's not so much like it's just that I like the economy,
Okay.
and I see no reason why it's going to abate. And so J.P. Morgan is the economy. They toned down all their crazy stuff, all their tradings. We're brighter than other guys. Jamie Dimon says no more of that. They got rid of all the mortgage crap. They just are the bank for the nation, and I think their price reflects it.
Jamie Dimon wants a job in the Trump administration.
I think
He'll be
if they're
his
not,
Robert Rubin.
I think he told them forget it, and
Oh, did he?
I think I suspect, and I'd like to see him as a VP under Kamala Harris, or even Secretary Treasurer under, just like all the Goldman guys
Well,
did.
here's your warning on JPM. I'm not saying it won't make a new high, but this
Mhm.
is a weekly chart. This was a
Yes,
confirmed high.
yeah.
This high momentum did not confirm. The third high, which is sharply higher, we still haven't even taken out the peak of this high. You have classic non-confirmations on JP Morgan. I'll buy it at 170.
Okay, you got me nervous. I'll have to watch this a lot more
All right.
closely.
Well, you know what? If we start closing back under 200,
Mhm.
204 or something, get out of the way.
Okay, will do, and
All
I
right,
appreciate
buddy.
that.
All
Okay,
right.
Dale.
I'd love
Thanks a
to
lot for
add
having me.
value. It was great talking to you. We'll speak in October, buddy.
Okay, sir. Talk soon.
My trading warrior brother, George Robertson. Thank you.
Bye-bye.
Thank you, George. Good hunting, buddy. They're all thanking you. Don't just count your pips, count your blessings, everyone. See you for Turnaround Tuesday.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.